Hi guys, today we will discuss OBV. Now, how do you know when the OBV is really great and when it's not that great? This is a really important question. Now, you can see I've made these lines. This line, wait a minute, let me zoom out. Now I have zoomed out to the max. You can see this line makes these lows as the lowest lows. See? The top line makes the highest highs. And then we have this line because these are the highs, these are the highs, this is the high. And then wait a minute, let me find it. Let's go. Or okay, we can't find much more, but let's see what happens next. Let's make one right here. Yeah, this is the good one. This low, 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 all on this line. Now these line represents like falling support levels. Let me zoom in. Now you can see that the price is rising up, up, up and up. Now whenever you are trading OBV, you need to remember whenever it crosses the previous highs, example right here, it crosses it, then it's a boom like day, booming up. It crossed the high right here. It's a booming period. But if it crosses the high right here, it's not that booming period as it is this booming period. Why? Let me zoom out. See, always remember, whenever the price crosses the previous like highs, example this is the previous high. So when the price crossed right here, it represented that the price will be making newer highs. Example right here, it crossed it somewhere here. So we knew that from 27 it will be making newer highs because it's crossing that like major highs of OBV. This is a high in 2007 and then we had the 2008 subprime mortgage crash. So we knew that this will make like a huge bull run. And if you look at it, let me show you. This is the line that was the previous high line and the price made from 27 till 32. But now the most important thing, once it stopped right here, made the second high and it never crossed it here. So it represented what? It represented that now it's not the bull run. So if you have to get out, you could have got it out at 31. The real learning trick. So the major highs in like huge back, if you look at it by zooming out, this high was November 2015 and this high was July 2016. So it's like huge 7 months gap. So if it can't cross within 7 months, then it's a like impossible task. Therefore, always remember this, whenever it's not breaking the highs, it's going lower. And if you look at it, from this high of 32, it went to 21. Why? Because it's not crossing up, and when it's not crossing up, it was a telltale sign that from 32 it's going lower, and it went to 21. And now it's breaking that. So this is the low, previous like most important low, current most important low. Let me show you. where it is right here, this low, and it's breaking it up. So I expect it's like going from 21 even lower. See, it's going till 19, the first target, or maybe lower. So you have to learn this thing. This was the line, it crossed it right here. Even from 27 it went to a low, this fall, this flash crash fall kind of a thing. But still we all knew that it's going up. And it did, because it crossed the previous highest high. And now it's breaking the previous low. So it's going lower. Let me show you. Right here, this was the previous low, the highest low. Let me make a line for you. Right here, once it broke this low right here, 26.51, although it came back to 29.18, but it went lower to $9.57. This is the thing in OBV. You have to pick the longest term signals and trade accordingly. Another thing is divergence. From this high, it's going lower. So whenever when it went lower right here, you knew it's not going up. So rather than buying shares in it, it was a lost cause. And it remained lost cause until it came back up. And right here, once it crossed it, this high right here at 21, it made newer highs of 27, 33% up. So the learning point is understand it. These lines of support and resistance level help you pick the long-term signal. Divergence help you understand what really is happening in the market. It's not rising. So if it is not rising and it's showing divergence, then why risk your money in it? So this is how OBV helps you understand what the smart money is doing. Because once the smart money made the OBV cross up, you knew it's going up, up, up. And it did. See? Right here, once it crossed this high of 2008, let me make a line right here. This is the highest high. I cannot find it above before that. But I can see the price going above it right here. So on 27, you knew 27 it's going up. And it went to 32. See? But on 32, you can see it's not crossing the previous high. This high was not crossed here. This high was not crossed here. And therefore it went down. And whenever you see it's trying for the third time, because this was first time, this was second time, this was third time, and it fails, then it's gone. It's not a good company to invest in. So these are the things that will help you trade OBV to your advantage. Always remember that. If it is not crossing for 3 times, that company is in doldrum. It's in the dustbin because it's not worth it. So always remember this. This is the thing that will help you learn. Although this is a good company, it gives out dividend 22 cents, 23 cents, 23 cents, 23 cents, a 10% dividend every quarter. So it's an awesome company. You can make $1 in a yearly return. Awesome. But you have to understand it. You have to see the OBV if the smart money accumulation is going into it or not. And as you can see, it's not. The highs were there. It never crossed it. And once it did, the highest high was here in 2007. And it did cross right here. You could have bought it. and made a 20% return in one go without risking anything. And then even the OBV almost told you itself that it's not going up and went lower. This is the learning point. Thank you.